If you're worried about the stock market crashing and it's a preventing factor from you investing in the stock market right now, today I'm going to tell you exactly why you do not need to worry about that. How's it going, guys? Ryan here with another investing video, and today we're talking about why you do not need to worry about the stock market crashing, and in particular, if it's preventing you from investing in the stock market right now, why it shouldn't be at all. But before we get into that, guys, please remember to like this video. It helps me out so much, and it helps me out with the algorithm, getting more views and that sort of thing, so I really appreciate it. And if you do enjoy the video, please subscribe to keep up to date with all the latest and greatest content on the channel. And today, leave a comment down below on what your biggest worry is when you're investing in the stock market. So without further ado, let's get straight into the video, guys. And as I mentioned before, today we're talking about why you shouldn't be worried about the stock market crashing and why it shouldn't be a preventing factor when investing in the stock market. And for a lot of people, they try and time the market, and this is something that isn't exactly the easiest thing to do, and more often than not, people are going to get it wrong. And if you get it right, props to you. Well done. It is hard to do, and at the end of the day, in my opinion, it comes down to luck more than anything else. But you shouldn't be trying to time the market, and it shouldn't be a preventing factor for a number of reasons. So if you go back to 1980, when we're looking at the Dow Jones, from 1980 up to 2020, you will see that the stock market has been in a consistent long-term uptrend. It has been going up overall over this period of time. And as a result, effectively what you're seeing there is an increase in the value of any stocks that you're invested in when you consider the market overall. If you purely invested in the Dow Jones, which is effectively the market as a lot of people like to consider it because it's the basis for what a lot of the activities and the fluctuations occur in the stock market, then you've made money no matter what. And moving on to the second point of that, it has always recovered when there has been a dip in the stock market. So what you'll notice is if you look at a chart of the Dow Jones, of the S&P, of absolutely anything, there have been a number of dips, some of which are actually quite significant. But for those people who are long-term investors and they're holding onto their stocks, this is not a concern whatsoever, due to the fact that every single time, without fail, the stock market has recovered. More notably, if we look at COVID-19, that caused the stock market to crash recently in 2020. It's already recovered. The Dow Jones has exceeded the previous highs pre-COVID-19. If you want to go back to 2008, when the GFC occurred, it recovered after that. No matter what hits it, the stock market recovers. No matter what. There has never been a situation, if you're invested long-term, where the stock market has not recovered. Instead, you don't want to be focusing on the stock market. Ignore the stock market at all. You want to be focusing on good companies to invest in. And more importantly, companies that can actually withstand these crashes that are inevitably going to occur. Whether that be small companies who don't have much operational costs so they can sit and wait and get through the period, or companies which have really strong financial backing, they're turning over a profit consistently, they're a necessity that people need and that sort of thing. You want to be invested in a company which is financially stable enough to withstand these dips. So moving on to point number 3, businesses still need to make a profit. And that is effectively what we're talking about here. Businesses are going to still keep operating, doesn't matter what the stock market is doing. If there's a crash, if the economic situation is going downhill, whether that be globally or within the country that your stock exchange is within, people are still making money. Businesses are still making money. They need to turn over a profit, not only to grow, but to keep people employed, to make profits so they can pay everyone. These businesses keep operating, and even when they're struggling, they will try their absolute hardest to maintain operational capacity. And then when they can, they'll turn it up again and they'll come back online harder, faster, and stronger. And often, a lot more often than not, they'll come back leaner. So reduce costs, high profit margins, those sorts of things. This is what you want to be focusing on. Then moving on to the fourth point, investors need to put their money somewhere. At the end of the day, people are going to continue to invest in the stock market. There's a lot of people, a lot of institutions in particular. You look at your Macquarie Banks, your JP Morgans, all these sorts of organizations, institutions, and individuals that need to continue to invest in the stock market and somehow need to make money in the stock market. Even though stocks will be dropping in value when there is a crash, for instance, these companies instead won't be investing, they'll be shorting. These companies themselves are probably more likely to be making money from taking a different tact on the stock market and their investments. But as I say, they still need to be making money, and there's going to come a point where the stock market reverses, as it always does. And when that time does come, people, institutions, organizations will pump in money to the stock market and it will recover naturally over a period of time. And I keep mentioning long-term investing. If you're a short-term investor or medium-term trader, whatever it is, you're potentially going to be the one that actually suffers because you're in and out. And if the stocks are consistently dropping and you're going long on stocks, you're trying to make a profit on stocks effectively where they're going up in value, then you're going to lose out because you're in and out too quickly for these stocks to recover. If you're long-term investing, on the other hand, you can wait a year, 2 years, however long it might be, or in the situation of COVID this year, it's only been actually a few months, 6 months for the stock market to effectively recover before you're back in the green again from where you were previously. So there's no need for you to worry about the stock market crashes causing an issue when it comes to investing. And if that is the preventing factor from you investing in a stock that you think's awesome, ignore it. It does not matter. You want to be focusing on the companies themselves, those companies which are quality companies, low capex, low opex, high profit margins, can withstand stock market crashes and financial issues and get through these periods of hard times and will come out even stronger on the other end of them. And with that, guys, I'll be wrapping up today's video. I hope you did enjoy it. And if you did, please remember to leave a like, as I said before, fumbling my words there a bit, and subscribe to keep up to date with the latest and greatest content on this channel. And as I mentioned previously, leave down below a comment of some preventing factors and some fears you have for investing in the stock market this year right now. So with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.